700 years, when we think about banking, not a lot changed. You know, even the word banking comes from the Italian formation of banking. You know, the word banco in Italian essentially was a bench that they had in the marketplace. And the bankers would come and sit in the marketplace, sit on this bench, and trade and help people with financing and so forth. Currency exchange, things like this. But when the banker got in trouble, they would smash the bench so he could not work in the marketplace again. So this Italian word for this is rupture, to break apart. So if you put it together, you get banco rupture, bankrupt, right? This is where the word came from. Even the names we use. On the Silk Road, when they used to travel, the Arabians used to travel on the Silk Road to China, they had a bill of exchange. They called it sak. This is a Persian word for it. We translate that today as check. So thousands of years later, we still use the same language. Banking hasn't changed that much in hundreds of years. But the first major technological change in banking was the introduction of the mainframe. So the mainframe computer, what it did is it dramatically changed processing inside the bank. Now when we think about Bank 1.0, the next era of technology disruption in banking, Bank 2.0, was sort of the era of self-service banking. Now, in 1995, we started to see the first internet banks arise, but really just before that, it wasn't, long before that, 1980s or so, that ATMs became popular, automated teller machines. So this is where true disruption occurs, when you start from scratch and you say, if we were going to do things better, if we were going to do things differently, and we started from scratch, how would we do that? Now in the financial service industry, we don't have first principles thinking. We have iterative thinking. The big changes in society occur when we go back to first principles thinking. And if you think about banking today, and you look for examples of first principles design thinking in banking, guess what? You don't see that in America, or Germany, or the United Kingdom, or Australia. But you do see it in Africa. You do see it in China. You do see it in India. You see it in emerging markets. That's the real opportunity. We're starting to bank billions of people that have never had a bank account before, and we're doing that through a mobile phone, and that's creating very different design thinking. Now, to illustrate the problem that incumbent banks have in this world, I wanted to use Jack Ma as an illustration.
If you want to have 10,000 new customers, you have to build a new warehouse and this, that. For me, 2 servers.
If you're not sure what he said 2 servers, 2 computers. You want 10,000 new customers, you're Walmart, you need a warehouse, you need stores, you need staff. 2 servers, 2 computers. This is how first principles thinking thinks about designing a new business, designing a competitor to an existing business. This is Max Levchin's company, Affirm. So what Affirm does is it allows you to access credit for a specific thing you're buying in a store in real time on your mobile phone. You don't need to apply for a credit card in advance. You don't need to go to the branch and sign a piece of paper. As you walk in the store, you just use this app and you can get access to credit. This is contextual design, putting the bank in your life when and where you need it. Now, when you think about the opportunity in Africa and elsewhere, there's 1.4 billion people that were unbanked, that we brought into the banking system since 2000 as a result of the mobile phone. None of those people, most of them, haven't been into a bank branch. They don't have a plastic credit card. They now just have like a mobile money account or facility like this. So they're not going to expect to get a credit card on their phone. They're thinking about this in a different way. That's the real opportunity here, to design a banking system that works primarily through the phone for these unbanked. That's the big opportunity in Nigeria, certainly across the African continent. Here's the opportunity. The opportunity is not to put more bank branches in place and get people to branches. In fact, in sub-Saharan Africa, the cost of physically getting to a branch is a big restriction to growth. So let's just use the mobile phone. So then the question is, how do you get people to trust payments, for example, on a mobile phone? In Kenya, it was a bit easier because Safaricom had 70% market share. But in countries like Nigeria, interoperability and acceptance is going to be absolutely key. This is how we have to think about banking in the future. Banking as an experience, not as a product. This is the real shift of Bank 4.0. This is how we have to think about money and banking in the 21st century. Money experiences embedded in your life. So you walk into a grocery store and you don't have enough money to get your groceries, you'll get a message on your smartphone solving that problem for you. It won't tell you to go to a bank, fill out a piece of paper, and wait for a credit card. It'll solve that problem when and where you need it. And in the future, with smart glasses in our head-up display, when we walk into a car dealership, our smart glasses will be able to tell us what car we can afford, how much we can afford. This is going to be banking that we can experience every day to solve life's problems. This is where we're moving to. You won't need to go to the bank for any of this. It'll be just embedded in your life when and where you need it. This is the key shift. And today, when you go to many countries around the world, they've replaced guys sitting behind the desk for the passport with artificial intelligence, with an algorithm that can do facial recognition or fingerprint recognition. I came through passport control at Nigeria at Lagos Airport. But you have these guys sitting behind the desk and they're looking at the photo. Can you take your glasses off, please? But this technology is already 15 to 20 times better than a human at doing facial recognition. So you have to ask the question, why do we still open bank accounts using a human eye to verify a customer when we've got technology that's better? So when you think about AI, the self-driving car is a good analogy for advice. This is what a self-driving car sees as it's driving. It has these LiDAR detectors, cameras. It can see 1,000 times more information than your human eye can see. And it can process that in 70% of the time that it takes your human brain to respond. So statistically speaking, no human will be as safe as an autonomous vehicle once this technology is mature, because it can process more information to make a decision. And that's where AI is going to beat humans on advice. The ability to process information and make a decision or give advice based on that information is where AI is going to outperform humans. That's a challenge we face. We're not going to have things like anti-money laundering processes. When we think about banking, this is going to be replaced with artificial intelligence, just tracking money flows. And so this all comes back to the fact that banks will need to become data companies. Processing data is going to be the big differential. Same as a payment company, anyone working in this space, you're only going to be as good as your data. So we have to start redesigning the products in banking to fit this sort of automated world. The value that we had, the way we marketed these products in the past, isn't going to work. And paper is the biggest killer for automation. If you still require a signature on a piece of paper in the future, your business is dead as a bank, because you can't compete in this world based on real-time integration of banking into people's lives. So really, if you're a bank today, you really have only three choices. You can partner with a technology company or a fintech, you can acquire that technology, or you can try and copy it. The fastest and most efficient method is to partner. So this is why we encourage fintechs and banks to work together. This is the real opportunity. Because every major industry will be led by a technology company over the next 10 years. You saw the graph beforehand showing the top performers on the S&P and NASDAQ. They're all technology companies today. Every leading company for each industry, whether it's health, whether it's automotive, will all be led by a technology-first company. This is the key. And blockchain is going to be the foundation of these architectures, not just for banking, but for things like identity and other things. So when you look here in Africa, you see great examples of the use of blockchain, such as the deployment of solar cells throughout African villages on the blockchain. You can buy a solar cell using Bitcoin, and for every kilowatt of energy that's produced, a new cryptocurrency is produced called a solar coin. And that can be used to purchase more solar cells and so forth. This is a great example of blockchain use in the African continent. But let me give you one final example. So think about an autonomous vehicle in somewhere like London or New York in the future, driving around, picking you up and taking you to your office in the morning. Maybe it has to pay for the road tolls and the road tax. It charges itself up later, gets some electricity, it has to pay for the electricity. But then it can log on to Uber as an autonomous vehicle and drive for a few hours, says, hey Uber, I'm an autonomous vehicle. Do you need a driving, autonomous car? And Uber logs it on for 3 or 4 hours, it drives, and it gets paid for driving for Uber. So it needs to have a wallet or some mobile wallet inside that vehicle to do all of these transactions. But how do you get that self-driving car down the bank branch to sign a signature card? You can't. So when we start having devices doing their own payments on the blockchain, this is when everything changes. This is when first principles thinking needs to come to the fore. So by 2025, the biggest financial institution in the world won't be a bank. It's probably going to be Ant Financial. By the end of next decade, we expect they'll have 3 billion customers, and they'll be in over 100 countries. They just bought MoneyGram in the United States for $1 billion to get access to the US market. By the middle of next decade, they'll be worth about $500 billion, twice what ICBC, the biggest bank in the world, is worth today. That's the power of disruptive thinking. That's the power of first principles design in financial services. If you really want to disrupt, you don't take the existing model and iterate on it. You start from scratch. And when you start from scratch in banking, and you say, if we're going to start from scratch today and create an entirely new way of doing banking, would you still put buildings on the corner of the high street that require you to go and sign a piece of paper to get a plastic card or a book from the bank? Not with a mobile phone in your pocket. That's not the way we would design banking today.